We also have Pramod Amthe joining us on the show. He's, of course, the head of institutional equity research at InCred Capital. Pramod, hi, good to be speaking with you. I was just going through your note wherein you have made the changes in your high conviction ideas for the month of January. And it seems like it's a lot more tilted towards large cap names versus mid cap, etc. Talk to us about what's the rationale, what's the outlook on the markets right now?
So we have been constructing on the markets. Having said that, the run-up in the last 2.5 months has been pretty steep at around 15%. We expect some consolidation to happen in the coming weeks. Having said that, we look at 2024 with a positive inclination as the macro factors are continuing to play out positively, even though our full year target is achieved ahead of time at around 21,000. We expect the bull case to play out as the GDP growth upgrades are coming through, inflation is under control, oil prices again at a relatively comfortable position. So I think we are looking at still a 5% upside from the current levels by March of this year.
Right. Pramod, this is Vinny joining in the conversation as well. That's your market setup that you're talking about. Any specific sectors that you would like to look at or you find very, very attractive in the current market?
So you were right, we were more inclined towards large caps, which has relatively underperformed versus the mid and small caps. That's where our relative comfort lies in. In terms of our high conviction, where our comfort is definitely we are added in our high conviction list recent last 2 months. If you look at more on finance names, State Bank of India relatively risk reward looks favorable to us. We are added Shriram Finance, and the recent change has been the small cap for adding up some distilleries.
Interesting there. Let me actually get Sony also into the conversation. Sony, a sharp recovery in the last few minutes itself. What do you make of it? And TCS, Infosys, of course, we talked about the IT pack, but you also have ICICI Bank and Axis Bank, which have managed to show a bit of an outperformance mostly throughout the week now.
Right. So I think likely I just mentioned that more the indices being in a sort of a consolidation mode, it makes sense to always buy in the lower end of the range, and that's exactly what we've seen. The sharp recovery has come from the support levels, and if we specifically talk about just ICICI Bank, it is. It's in a decent consolidation itself. So 980 being on the lower end of the range and 1030 being on the higher end of the range. So ICICI Bank is going to consolidate in this range particularly. Anywhere we see it coming towards the lower end of the range, towards 990, 985, we can enter in those dips with the stop loss of 980 and then look ahead for targets of 1020, 1025. So that's how ICICI Bank is playing out. Axis Bank, on the other hand, is on charts is looking better than ICICI Bank as of now. So Axis Bank is definitely heading towards its a resistance of 1160, which it can take out. And the moment it's done above 1160, it can head towards 1180, 1190 levels. On the downside for Axis Bank, 1120, 1118 plays a very important role. So I think keeping those as stop loss, one can still look for the higher targets of 1160 and 1180.
Okay, that's Sony's view. But Kunal, what's your view coming in on the markets as well, this recovery that we're seeing? And, how should one actually be reading this part of the recovery, right? We've seen a bit of a flip-floppy, like one day you see it trading in the green, suddenly in the last half an hour you see it falling in the red. Now today, it's the reverse case, you're seeing a recovery again coming back. What should one read from
I think one should not read the index.
Read at all? We should just relax.
Because we are not going anywhere.
In the Friday and the weekend mode.
Yeah, absolutely. But we are not going anywhere. I think we've been to this 300-point range and, volatility, minor volatility of 200, 300 points on the Bank Nifty, 300, 400 points on the Bank Nifty and 100, 150 points on the Nifty actually doesn't mean too much in terms of signals, because most of the indicators are now getting into that, resting mode for themselves. So it may be a process of another, couple of weeks where the indices may get into a drag. You might have one-off day where the Bank Nifty moves up higher, the Nifty moves up higher. But then effectively, these indices fail to cross over above their previous swing highs as well as don't break below the previous major swing lows. We would call them as a range bound market, and within a range, even if you have such kind of volatility, it really doesn't indicate any kind of a trend as such.
Pramod, coming back to our conversation, and I wanted to make it a bit more stock specific, and correct me if I'm wrong, but I do see that you have added Som distilleries to your list while you have deleted BCL, which is a quasi play on ethanol and sugar at this point of time. What makes you that bullish on Som distilleries, and what's the take on the entire Alco Bev industry? Because today, Sula Vineyards is also on fire clearly.
So broadly, in case of soap, the stock has corrected, and clearly we feel that the market is not fully factoring in the its market share gain in the large beer state like Karnataka, and hence in that context, we clearly see that the risk reward is favorable to soap. Having said that, the other name which we have in high conviction is Global Spirits, which is a beneficiary of the recent revision in the ethanol prices. Whereas BCL, we feel that the post run up, the raw material cost pressure because of inflation is relatively higher, and hence the risk reward doesn't seem better. So we exit the BCL for high conviction, and we introduced SOM on a relative basis.
Right. Pramod, there's something interesting also coming in is, signed DLM. That's a stock that you've picked out in the small cap. A lot of action that is happening on that EMS side, or, the traction that is picking up. Signed DLM is part into that as well. What is your thoughts on this EMS industry?
So you are right. There have been a lot of IPOs and fundraising and action in the EMS space per se. Where we would like to look at it is we would within that space look at a high entry barrier business, which exactly fits into the signed DLM per se. And that's where our relative comfort for signed DLM for bagging new orders internationally and able to execute some of the orders as we go forward, especially from the Israel conflict, and that should give them a better exposure there, is what we are trying to play within the space. Followed by this, we also, if you are to look at, we initiated this space a couple of months back, where our relative comfort is after this INDLM, we also like Keynes, which is again entering into the high entry barrier semiconductor space, and hence that gives us a more comfort. So, but we would be looking at more superior margins, high entry barrier businesses to support the high valuation which the sector enjoys as compared to the mass market assemblers.
One sector which I see missing from your entire list of high conviction is actually real estate. Aren't you having a FOMO feeling there, given the kind of run up that we have seen last year, and even now in a matter of this week itself, that index is up what 10-12% I think, or at least 6-7% for sure.
Layout, structurally we have been positive on real estate or the housing and housing related activity. We don't have a coverage on the real estate names specific, but the way we would like to play out is within the high conviction we have KI Industries, which gives us some comfort. Otherwise, we have recently upgraded Century in that space, which gives us proxy to both the new home sales and the renovation of the existing home sales which are happening. That's how we would like to position that versus the overall real estate developers.
Soni, what within real estate looks attractive to you?
Yesterday, we've seen the entire pack going up, and no, DLF definitely is at still momentum where you can see it has a lot more space to rally from current levels, because it has formed a good support around 330-35 odd levels. So I think on any dip around 745, one can enter, keeping a stop loss of 735. Sorry. Keeping a stop loss of 735, and it can extend the rally up to 780, 790 levels.
But, I want to switch gears a bit and talk about some of these mid-cap IT names, Kunal. All of them today, IT is finally doing something. Anisha, you should be happy that it's at least managing and coming back again after talking about it so often. Mid-cap IT names, and Birlasoft is making that list a bit too much in the top side as well. Is that something that, is still there is some value? Do you think that is something you would look
I think
at
it's
now?
been one of the best performing mid-cap name, mid-cap IT stock in the last 6-8 months. I remember, I think, tracking the stock when it was sub 300 in the month of March or April, 300 thereabouts. I think the stock is now at 730, 740 levels, so that was the recent high for Birlasoft. So I think it's been a fabulous chart. And I like the consistency of the trend in the last 6-8 months, where the stock had, once it managed to break past about the 200 and the 50-day moving averages, post that, we call that as golden crossover, as a strong technical event. Post that, the stock has not yet even retraced back towards its 50-day moving average, let alone the 200 DMA. So that itself is a strong sign of strength as well as consistency of trend for Birlasoft. Even in this last 1 week or 10 days of price correction, the stock has managed to bounce off above the 50-day moving average itself, not even testing those levels. So that itself indicates a sign of strength. These are the kind of charts which we typically look out for when you're when you look to buy on retracements. I think the support for Birlasoft is closer to the 700 mark. So, in case if the stock dips down to that point and again doesn't break below the 50-day moving average, that's a good level to enter.
Okay, let's see whether the stock gives you that entry opportunity or not. But important flashes for you at the bottom of the screen as well, wherein the government is saying that they're likely to shrink the FY25 fiscal deficit target by as much as 70 basis point to 5.2% of GDP. Now, 70 basis point might seem small, but for the size of the budget that India has, it's a humongous number. And deficit coming down means two things: either the government is cutting down spend, which doesn't augur too well for the infrastructure of the country, or it means that the kind of inflows that we have got in terms of the tax collections have been strong. The government is backing that it's on account of latter, that this time around the kind of strong economic data and the tax collection has been so strong that it's managed to narrow down the deficit. So not curbing down on spend as much, but it's probably the income side of things which is looking much healthier, and that's why they're willing to cut down the deficit a bit. Of course, the good news coming in terms of the ratings of the country as well as the bond, index as well, because that will usually cool off as the risk becomes lower for the country with respect to the deficit coming down. But coming back to the markets, because that is where all the action is, and since we are keeping it with IT, let me toss it to Pramod as well. Pramod, IT in terms of earnings, people were not expecting too much from Q3, so let's not discuss that. The question is FY25 now, and will the double-digit revenue growth return? Because if you look at the deal bookings, they have been strong, but it's been the case of the clients curbing down their billings, curbing down the spends. Do you see that reversing anytime soon?
I think if you look at, you're right, the clients are closing some of the deals, especially in November and all. Having said that, the larger space, which is the BFSI related work for IT, is still a substantial amount is moving towards the insourcing. And that remains a headwind for FY25 as cost related issues continue to be a challenge for global banks which spend on BFSI space. And hence, still the confidence is not coming through for the IT because of this specific segment, which forms a substantial part of the overall IT spend. Hence, we have been very selective. The only only stock which we are specifically putting in high conviction is more of a tech Mahindra, which is a management effort to turn around and normalize their profitability and bring back the sales growth post that in the next couple of quarters.
Pramod, thank you so much for joining in with us this afternoon on ET Now and talking to us about high conviction stocks. What's your thought on the markets as well?